So the fact that the debt bubble has already been popped, that it has already been popped. Yeah, we're at the end. We are 100%. There is not one doubt in my mind. It's over. It's done. Maybe we have until 2025 till we're like super in it. But the reality is it's already over. It's over. It's over. I don't know how to say it any other way than that. What do you want to do? When is the time to get prepared? Before you need to.
Receding fears of a U.S. slowdown, surging bond yields, and the robust performance of equities have gradually eroded the appeal of exchange-traded funds, ETF, backed by traditional safe haven gold this year, despite sticky inflation. According to Lynette Zang, the founder of ITM Trading, the debt bubble has already burst, and we are at a point of no return. She suggests that the current financial situation is precarious, and the debt bubble has already popped. She emphasizes the urgency of being prepared for potential economic challenges. Investors typically buy gold and silver during financial and economic uncertainty and rising inflation. This was seen in May when gold rallied to near-record highs during the U.S. regional banking crisis. Since then, the price of gold has dropped roughly 9% to 5-month lows, around $1,890 per ounce. Lynette discusses the historical role of precious metals as forms of money and stores of value. She highlights that unlike fiat currency, which is subject to inflation and manipulation, precious metals like gold and silver have intrinsic value and have been used as mediums of exchange, measures of value, and stores of value throughout history. Over the past 50 years, investors have seen gold and silver prices soar and the stock market plunge during high inflation years. This is because when fiat currency loses its purchasing power to inflation, gold tends to be priced in those currency units and thus rises along with everything else. Moreover, gold is seen as the most appropriate store of value, so people may be determined to buy gold when they believe that their local currencies are losing value. Now let's watch excerpts from Lynette Zang's interview with Silver Dragons. Be sure to watch the entire video and consider subscribing to our channel. Don't forget to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
The debt bubble has already been popped. When you know you're going to go bankrupt and you get more credit cards, and that's what's happened since 2008 with all the quantitative easing and all of that. And they talk about quantitative tightening. Well, the banks are now tightening their standards. Because this whole money system, is based on constantly compounding and growing debt. It's not based on paying the debt off. So the fact that the debt bubble has already been popped, that it has already been popped. Yeah, we're at the end. Governments wanted to tax you without having to go through legislation so that you didn't know you were being taxed. And corporations wanted to pay their workers less money. But they knew that if you were used to getting $10, you weren't going to accept $5. But by putting inflation into the fiat money, that those entities could accomplish both of those things, because we have the almost invisible inflation tax. Inflation is not a monetary phenomenon. It is a fiat money phenomenon, because this is based upon debt. And when you have debt, what do you have? You have interest on that debt, don't you? So there's your inflation. This is savings, because it's real, it's tangible, and it's used in every single sector of the global economy. So it has the broadest base of demand and therefore the broadest base of buyer. This garbage is used in one place. And we've been taught, in the beginning, what was money? Money was supposed to be a tool of barter. Okay, this mimics that. It was supposed to be a tool of measure so that you could have, the society could specialize. You could have a baker, you could have a farmer, you could have a lawyer, right? And it was supposed to be a short-term store of value so that you were always fairly paid for your labor currently, and a long-term store of value so that you could save that money, and then whenever you needed to use it, you were being fairly paid for your labor whenever you did extend that labor. But over the years, first, the Federal Reserve took those 4 points, those 4 pillars of money, and only gold actually meets all of the criteria to be a good money. Silver is the secondary monetary metal, but only gold meets those criteria. This was designed to imitate it or mimic it.
Despite significant selling by Turkey that slowed net central bank gold buying in the second quarter, central banks added a record amount of gold to their reserves through the first half of 2023. Net central bank gold purchases totaled 387 tons through the first half of the year, according to data compiled by the World Gold Council. That was the highest first half total since the organization started collecting quarterly data in 2000. Lynette emphasizes the importance of holding on to gold to retain power and freedom. Throughout history, those who own gold have maintained their choices and control. Governments have always turned to gold when their fiat money currencies fail, as gold retains public confidence. Lynette points out that over 4,800 fiat currencies have disappeared, but gold remains a constant in this cycle. Turning to the FedNow program, Lynette finds it intriguing that the announcement in 2019 about universal Federal Reserve accounts didn't materialize until 2023. This temporal gap prompts questions about its underlying motives. Notably, the widespread accessibility of FedNow accounts, including those in remote areas, harks back to the discussion during 2020 when stimulus checks were issued. Lynette believes that streamlining transactions into individual accounts was presented as remarkably convenient and expeditious. She suggests that FedNow is an integral step towards establishing the infrastructure for a digital US dollar. Let's get back to the interview.
What they know is if they want to hold their power and their freedom, they have to hold gold, because whoever holds it retains their choices, retains their power. They want to stay in power. And they know that, and this happens again, 100% of the time. There are over 4,800 fiat money currencies, so government-based currencies that no longer exist. But gold, they always then bring gold as a component of the new money in them. And they will this time because they're going to need to get the public confidence back again. And that is a big part of the problem. This is a con game. It requires confidence. When all confidence is lost, they got to bring back the gold. First of all, what's interesting is they made this announcement to great fanfare, how everyone would have an account at the Federal Reserve through FedNow, and they did that in 2019. Why in the world would they announce that in 2019 and not bring it out until 2023? I mean, I think that's really interesting. But the fact that everybody's got an account, even if you're in a very rural area and you have your bank account at the post office, you have a FedNow account. Now think back to 2020 when they were sending everybody these stimulus checks, and they talked about how much easier would it be to push a button and just have all the stimulus money go into these individual accounts. So much more convenient, so much faster. So yeah, there's not one doubt in my mind, but that the FedNow is a step in the infrastructure for the US digital dollar, and they will probably keep the name the same because that's what they do. They try and keep things as much like what we're used to as possible so that we don't notice the transition until it's way too late. And when they're trying to make a transition, one of the things, this is another thing that they always do.
Gold prices hovered around a 5-month low on Monday, the 22nd of August, as elevated bond yields pressured bullion. However, when money loses value due to higher prices, gold becomes more valuable. This happens because people see gold as a reliable way to keep their wealth safe when other options seem risky. How do you think the value of gold and silver will rise in the face of shifting economic trends? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.